Welcome to Thursday, September 12th. Everybody's here. The weather is 77, not bad at all. But the leaves are starting to turn. All right, folks. So let's start by taking a look at what we're going to do today. I am going to not only look at the schedule for today, but let's see what's happening in the coming week. So as always, I go to the course documents and I go into the schedule. And looking at the schedule, today is all about chapter 2. We're going to do a lot of stuff with chapter 2 today. And that will put us into next week with chapter 2. Now,
Okay.
next week, we've got our first exam slated for Thursday, September 19th. So now this is how this is going to work. I'll talk more about the exam next week. I don't want to spend time today to do that. But depending on how today's class and next Tuesday's class goes, we're going to we may or may not have class on Thursday, September 19th. Okay. It all depends on where we are with the material, how if I feel comfortable enough that I think everybody is ready for our first exam, which will be on chapters 1 and 2, then great. If not, we will have class that day, and then to finish some things up, and then you will be the exam will be made available after that time. So again, I'll have more information about the exam in the coming week. I don't want to talk too much about it today, but that's the plan moving forward. Looking into the next week. Yes. I'll talk more about that next week, but for now, I'll tell you it's going to be online. Yeah. There's a question was whether it was paper-based. The exam was paper-based or going to be online, and it's an online form. With this being a high flex course, you have in-person students, Zoom students, and then of course we have completely online students. It has to be a format that all people can do, all students can do. So another thing while I'm here, over the weekend, I'm going to work on updating the grade book on Brightspace for the first time. Right now, it's kind of a mess in there. There isn't really anything populated anywhere. But that's going to change because I'm going to get all that updated. Some things that are listed in there will, I'll remove them. So we only have the pertinent information in the grade book, because right now there's a whole bunch of things listed in there that don't apply. I will get all that squared away and cleaned up. And then once I've made that update, I'll go ahead and, post an announcement and let everybody know that that's been done. So once again, part of that update will be, kind of looking ahead at this, anything that we had for assignments that were graded for completion. I basically review your work to see if there was an honest effort. If there was an honest effort, you get the full points. If it was only half done, I adjust accordingly. And if you didn't do it at all, of course, it's a 0. Okay. So all of that's coming, and your homework grade pretty much will constitute your course grade at this point, because that's the only thing that we have in the grade book at this point that is, making up your grade. Okay. When we do the first exam, obviously that'll factor into it. And once the due date, day and time passes for that, I'll do a grade book update immediately after. So you'll have an idea where you're at. Okay. So that's coming. And a few other updates that I discussed previously on Brightspace that still aren't there, but I will get there, trying to get everything all squared away before the end of the week. And if I go into the weekend with it, that'll be, I'll have to do that. But before we have class on Tuesday, all those things should be updated. Okay, so next thing would be, I want to take a look, at the homework. I gave a homework assignment. Now, when I did this, originally I was going to kind of have a hybrid of things. I was going to give you one thing in chapter 1 and then some chapter 2 stuff. But when I went to deploy it, I'm thinking, you know what, I'll just leave the chapter 1 thing in there. And then that'll be the finality of the stuff with chapter 1. But what you get for homework tonight will be all chapter 2 at that point. Okay. And, also holding off from that, I wanted to make sure that we had at least another class under our belts before I gave you something to work on for our next class. So, all right. So I just want to click into this, and I don't want to spend a lot of time on this because we've been doing this you know, all the way through, quite a bit. Now, the way I did this, I said, everybody got different numbers, but I'm gonna go ahead and take a look at what I have. All right, and what I have may not match what you've got. But you know, that's, I just wanted it. So this is like a kind of a repeat of one that we had, a while back, with different things in it. Okay. So let me go ahead and expand the question. There we go. So what I want to do is just kind of show loosely with my version that I have, everything that was in there. Okay. Now, obviously that's the first part. We got more to the equation over here, but, you know, so all the transactions laid out, similar to like they were before, and we've seen all these, we've worked with these. This very problem we've done before, and this is just another version of it. So how I'm going to do this is I'm going to, you know, just kind of zoom in on these transactions. And this is all you had to do was just placing the transactions on the accounting equation. And then just, is there any questions about any of those that anybody in the class, you know, Zoom or in person wants me to go over? I'll do it that way. Because if there are no questions, and this is basically stuff that you're feel pretty confident about or don't have any issues with, I'll go ahead and move on to chapter 2. Now, the other thing is if you don't have questions now, or if you have a lot of questions and need a lot of assistance, but don't want to do it now in class, that's fine. Just reach out to me, either a text message or email, and let me know if you want to set up a time to meet, and we can, you know, fine tooth comb the whole thing. And if you're having difficulties placing the numbers, getting a lot of things wrong, reach out to me. We'll throw something in the books for an appointment, and we'll sit down and go through it. Okay, so that's a follow-up thing that I'll say, I guess. All right, so yeah, your score is in there, and you have the correct answer tab. Of course, you could go in there and see what should have been, and that's pretty much it. That's the finality of chapter 1. Now there was a part B here, which I guess I did give you the one that has the statements. You know, so those are in there as well. Okay. To my knowledge, I thought it was I just wanted you to have the transaction stuff, but apparently they had an income statement in there as well, which actually is not a bad thing because you can practice that a little more. You know, if you did that part, that would be like the second run with this. Okay. Is anybody in class that didn't do the second part? That missed it or forgot about it? Okay, it looks like everybody did. Okay. And you know, in Zoom, that, you know, if you want to let me know if that was the case, that's up to you. Yeah. So again, any questions that you have, let me know. And but I'm going to go ahead and move on and get back into what we were talking about with chapter 2. Okay. All right. So moving into chapter 2, I want to go into that content area under chapter documents, and I'm going to go into chapter 2. And I'm going to pull up a few things that we're going to work on today. Okay. Now, one thing is, that's a Word document. Okay, I'm looking for, now, one thing that we have in here, and I didn't print and bring any today, but we will absolutely be using this in our next class. So when we do some things today related to transactions, you can probably write that in your notes, you know, and set up a table manually, but we'll have a handout for you next time for that. But I'm going to open up a couple things that we saw in our last class, and I want to have versions of those available. So I'm going to open those up. All right. And then there was that. And then also in that same area, we had the account type descriptions. So, you know, even though we've seen this all through chapter 1, it's good to have this document open if we need to kind of reinforce or, you know, revisit what the definition of these 6 account types are. Okay. So if you remember in our last class, and I'm just going to go through this a little quick as a kind of a retread of what we did last time. We had the definition of an account, which, you know, I had been giving you all the way through. And we realized that, you know, we could use a T account to kind of depict this. And without all the, you know, the extra wording in here, the basic concept is that an account is, again, just an area where we track increases and decreases of a particular thing. Anything the business wants to track, as I said before, they'll create an account for it. All right. And it's true with us in our lives too. If you're, like I said, if you do personal budgeting and you want to track how much money you're spending on, you know, restaurants or fast food, or, you know, how much you pay in a year for your utility bill or something like that, you create a budget and you track those costs. I have one myself, and at any given moment, I can generate a report or graph that shows where my money is going, you know, and I could do that right now for part way through the year. And then at the end of the year, I try to look at where most of my money went there during the year. Yeah. And the funny thing about, you know, a budget is that it literally is what we're doing in accounting too. You're tracking specific areas. You want to know how much you have of that, or how much you spent in that area, or something like that. Okay. And, you know, if you don't do a personal budget, if you start doing one, you will be amazed at how quickly it adds up for stuff like eating out, or grabbing coffee at Starbucks and things like that. You know, that money adds up very quickly, and, you know, kind of draws attention to the fact that, you know, going to one place one time and another place another time, you think, ah, it's not a big deal, it's just a few bucks, but it adds up. All right. And you don't know that unless you start tracking and keeping tabs on that. So that's really what an account does. So then what we did was we kind of looked at, you know, the format of it. All right. And we worked on that. But when we got done in our last class, we had a good working functional knowledge of the debit credit rules, which we're going to revisit today. And sharpen up a little bit. And then what we're going to do today is we're going to move forward from the account form and then get back into those journal entries. All right, revisit the format, and we're going to take some transactions and put them in the journal, or journalize them as the term goes, and also place them in the accounting equation. So we're going to tie what you did in chapter 1 to what we're doing in chapter 2 here. And we're just going to practice a lot of transactions and putting them in a journal entry. All right, so we remember that we had an account form. The left side here is the debit side, the right side is the credit side. And then we realized that, you know, those two sides kind of battle each other, and the bigger side wins. So the debit side here was $8,000 and $8,050 more than the right side, or the credit side. All right, so, and that's basically how an account works. Then from there, we realized that depending on what account type you have, one side or the other is what we call the normal balance side, or the increasing side. And it really depends, because here you have two different types of accounts, and you see that assets are increased with the debit, whereas liabilities are increased with the credit. So it's the mirror image of what assets balances are, okay? So, and then from there, we kind of expanded that to say, okay, there's the accounting equation. And then really what's going on is everything to the left of the equal sign is normal debits. Everything to the right of the equal sign, with two exceptions, are normal credits. All right. And then the decreasing effect items on owner's equity have the same normal balances as the assets. Okay. But what that translates into is that we have three account types that have a normal debit balance. All right. And again, we define that, and I got to get my chapter 1 or chapter 2 notes back up. We defined a normal balance as the side, debit or credit, that is the increasing side. Okay. That's one definition of it. All right. So the functional part. But really, conceptually, what the normal balance is that for the account in question, if it's got a balance, that's the side the balance is going to live on. All right. So again, going back to cash, as we had an example way back here, right? Cash has a normal debit balance because it's an asset, right? So if it's going to carry a balance, it's going to be on that debit side. And then all the increasing things here that we saw in this little tabular summary to the left went on that side. So anytime we wanted to increase cash, we put the number on the debit side, and now all these decreases went over on the credit side. All right. So that is a very quick review of where we were last time, okay? And what we're gonna do now is kind of take all that and dig into a little, it's not even a pop quiz. You remember, you know how I feel about pop quizzes, but just a Q&A, we'll call it a Q&A back and forth. Just to reinforce these rules here, all right? Because two important things we need to have in place for this next part that we're going to work on today with the journal. Abilities that you need to develop and have. First one is, if I give you account titles, or an account title, I should say, you should be able to tell me of the 6 types there on the left here, these guys right here. You should be able to tell me what type it is. And then once you know what type of an account you're dealing with, then you know what the normal balance is. So that automatically tells you what increases and decreases that particular account. So that knowledge we're going to do something with, okay? So first things first, and we did this near the end of the class, let me give you an account and you tell me, you know, what type it is. Well, I'll ask you, and then you give me an answer, and then we'll figure out the normal balance. So if we have accounts receivable would be what type in that list I have selected up there. That would be an asset. That's right. And Zoom folks, I'm going to pull the chat up so I can see you. There you go. Yep, that's right. It's an asset. So if it's an asset and I wanted to increase accounts receivable, what would I do? Would I debit or credit? Debit. Yep, because again, the normal balance or increasing side is the debit. All right. So, and conversely, if I wanted to decrease accounts payable, for instance, if customers paid some money they owe on their balance to us, we would have to credit accounts receivable. Okay. How about another one? How about notes payable? Notes payable will be what type? Liability. And the trick I taught you there is liabilities. You know, most of them have the word payable in the name. Unearned revenue is an exception, but we'll see that and work with it. So we know it's a liability. If I wanted to decrease accounts payable, what would I do to it? If I wanted to decrease it, you would debit it. Yeah, because credit is the normal balance. So this is what you do if you want to increase it. If I wanted to decrease it, I'd have to do the other thing, the opposite side. Yeah, so I'm kind of mixing it up a little bit. So, you know, try to get your brains firing up on this stuff. How about supplies expense? Supplies expense, what type is that?
That is the asset.
It's not an asset. It is a expense. Okay. So if I wanted to increase supplies expense, what would I do to it? Increase it. You would debit the account. That's right. Yeah. And then also, if I wanted to decrease it, then I would credit the account. Yep. So, and if I had owner's capital, what type in that list would that be? Yeah, owner's capital would be owner's equity. Yep. And so if an owner has an investment and we increase owner's capital, would I debit or credit the account? You would credit the account. So this is the name of the game. So everything that we just did in this little Q&A, we're going to use those same abilities when we start piecing things together for a transaction in order to prepare a journal entry. Okay. So all of that's very important. And I have a way to show this to you that organizes the information and makes it, you know, kind of gets your thoughts out on paper, so to speak, so you can be better at figuring out what accounts are debited and credited in a transaction. Okay. So speaking of that, what I want to do next is go back to this and kind of revisit the journal here. Let's skip the pop quiz and the thing here. All right. And I want to go right into where we were before. All right. So as I said, we got all the chapters 1 through 4 are going to have keep revisiting this. All right. And this is an illustration for the 9-step accounting cycle. So if we counted each one of these little arrow shapes up, we'd have a total of 9 things there. So in chapter 1, as I said last class, we were doing this. We were analyzing transactions, plotting things on the accounting equation, you know, and then making sure everything balanced out or was equal. Okay. What we're doing now in this part of class is we're going to learn this step. All right, we talked about a journal entry, what it does. It's again, the analogy is similar to like if you keep a journal or diary and you put an entry in there. And you're basically just telling what happened to you or if thoughts you want to share, things like that. And the journal for a business is very similar to that. It has a purpose where anything that happens to the business that's considered to be a recordable transaction, where it enters our accounting system is in this journal. All right. So the big skill we're working on today, and by the time we're done, whatever that time that happens to be, you guys are going to be able to do this. And then I'm going to have you try it for homework. All right. So this is the first skill that I want to focus on and just put laser focus on and just practice, practice, practice. Okay. All right. So in the recording process where we journalize transactions, okay, we first we figure out if a transaction belongs in the accounting records, you know, because you can have something where if we interview and hire an employee, that's a business event, that's important, but there's no exchange of value, so there's no transaction. All right. I'm not saying that's not an important event for the business. Of course it is. But you got to have something where there's an exchange of value. Okay. So let me take that same scenario. We interview an employee, we hire them, and we give them a check for, you know, $1,000 as a sign-on bonus. Now you got a transaction. You have value coming from the business to another party, and now we have something that could be recorded in a general journal entry. So that gives you an example of what's happening there. All right. So when we see the journal, all right, just a few quick things that we saw last time. This we call it the book of original entry because as information enters the system, that's where it comes in. All right, that's where it starts. So if we have something that is a transaction, has to be recorded, it goes to this journal first. All right, which is why again we've got those steps. That's step 2 for a reason. Okay. All right. So and then we record our transactions in chronological order. So, you know, the date and even the time in some instances, for some systems are notated as well, when the transaction occurred, when it happened, you know, what day it happened. And in a given day, we'll have a number of journal entries, okay, number of things that happened to the business. We might have bought some supplies. We paid our, salaries and wages to our employees, okay? We incurred advertising costs on account. All those things you saw in chapter 1 were all transactions. What we're going to do here is instead of just plotting them on the equation, which we will do also in this, demonstration here today, just to tie it into what you did to chapter 1, we're going to be putting everything in the journal. And that is when, that's the real deal. So if you use QuickBooks or any other, software for accounting, or if you're doing it manually, the journal entries are going to look like what you see here, what I'm about to show you. Okay. All right. So now the recording process, part of which we're going to do today, you analyze the transaction, you enter them in a journal. That's the laser focused thing we're going to work on today. When we see each other on Tuesday, we'll talk about this next step here where we transfer the journal info into what we call ledger accounts. So don't worry too much about that for now. That's something we're going to get to on Tuesday, and I'll show you how that works. I got a in-class thing that we'll walk through to learn the process. So we're looking at just journal entries. Now, before I do anything, and really start picking this apart and plotting it on the equation that we remember, all right, from chapter 1, let's talk about the format of a journal entry, okay? So obviously you're going to need a date because any journal entry you put in the books, you want to know what day, and what's, some more sophisticated systems, they even notate what time the transaction was recorded on that day. All right. Right now, I'm only concerned about the day. All right. So September 1st. All right. And here's the anatomy of a journal entry. Well, the numbers are clearly placed. Debits, no matter if there's 1 debit or 5 debits or 2 debits or whatever, all the debited things that need to be, debited are done first. All right. And notice that we talked about debit meaning left. Okay. I even have that in the notes. Debit means left, credit means right. So when you see the journal here, that continues to support that. all the debited items are kind of tight to this little left margin here, all right? There's a little space in there, but they're pretty tight to it. And that will be true in Wiley Plus when you see them in there as well. And the number goes in the debit column. Then the next line down, we kind of indent a little bit, all right, about 5 spaces. And your credits are to the right a little bit, all right? You don't want them like way over here. Just in about 4 or 5 spaces, about the size of a pencil eraser. And then you write in your credited account. And then, of course, obviously the number goes in the credit column, all right? Now, one little trick that I kind of say to students that kind of locks in what always goes first is I tell them, just think of the phrase Washington, D.C., all right? Washington, D.C. The D always comes before the C. So debits are first, then credits, okay? Always. And yeah, it doesn't matter how many of each of those you have. I mean, you're going to have at least one each, which we call a simple or a standard journal entry. But you can have multiple debits and credits, but if there's like 3 debits and 4 credits, all the debits must be shown first, then the credits. Okay, that's basically how that format works. Now in Wiley, what will happen is then when you enter your choices in the fields there, when you put a number in the credit column, showing your intent to make that thing a credit, Wiley automatically indents your credits for you, which is kind of cool. I'm glad they do that. Earlier versions of Wiley, they didn't indent the account title and the format was wrong, which confused students. So they fixed that. So, and they kind of automatically do it for you. All right. So you put the number in the credit column and it's going, boop, it's going to just go right over. It won't make that noise when you do it, but it will move right over there. Okay. All right. So then another thing, if you're doing this manually, which we will be doing because we're in our very next class, we're going to have an in-class activity where you're doing this. Zoom folks have a spreadsheet, in-person folks will have paper or spreadsheet if you choose to do that on your computer. Skip a line between each transaction, a full line, all right? Because when you put the journal entries on top of each other, it's kind of like a run-on sentence where there's no spaces or gaps or anything. Skip a full line between each individual transaction, okay? So what I want to do with these sample transactions that we got here is I'm going to go into our accounting equation, all right? And just kind of show how everything would go on that equation, right? And then I'm going to do a little more with it, okay? I have another document that we're going to use as a table to complete to help figure out what to do with these journal entries, okay? So when I've got the first thing here, and this is straight from chapter 1, you've seen this before. Okay, as I mentioned before, when we saw this last, on Tuesday. So Ray Neal invested $15,000 cash in a business. So, again, is cash involved? It is. It's coming in. So that's an increase to cash. And then we've got an increase to the equity. Now, when we put this on the equation, and I'm going to actually kind of bring this down so we've got both things available. Right, let me go ahead and get rid of that. Move that up here. Shrink that down a little bit. So we got everything in there. When we did this on the equation, our cash balance went up, right? So we would go under cash, put 15,000 in there, and then owner's capital went up 15,000, right? And, we made sure that the equation balanced 15,000 equals 15,000. Good, okay? This is what it looks like in a journal entry, all right? So this kind of reinforces why some accounts are increased with debits and others are increased with credits. So you have this kind of counterbalancing thing that we noted in the equation, and then the journal entry kind of does that too, all right? So cash is an asset with a normal debit balance, so we're debiting cash, which means we are increasing it. Owner's capital is an owner's equity account with a normal credit balance. So when we credit the account, we are actually increasing it, which is what we did over here. And that's the tie-in, all right? So now one other way to do this, all right? And I just want to pull up a different spreadsheet. I'm going to blank my screen just for a second here. I want to grab that. Is trying to figure out, and this is I'm going to show you something that's actually going to show you exactly how to figure out how do I know what to debit and credit, right? I know the basic rules, great, that's fine. But how do I know what to debit and credit? All right, and that's a thought process that you work through. And I have a document here that's going to help you do that. Okay. All right. That's not what I'm looking for. Let me see. There's something in here. There we go. That's the one I wanted, I think. Yeah. Yep. Go all the way to the beginning here. Almost there, folks. Spreadsheet with multiple worksheet tabs, and I'm looking for that one I'm looking for. Let's see. All right, there it is. So I'm going to take what we just did and I'm going to show you another spreadsheet that I got. But this is something that it's kind of a hint as to what we're going to be doing in our next class, because I'm going to have a handout for this. And again, a Excel-based version of it for the Zoom folks who are here. So to do this, we have what I call a transaction table, okay? And in order to properly journalize a transaction, you got to have a number of things in place in order to do that, right? So that's what this table is all about. Let me just kind of bring that over a little bit. There we go. All right, now you notice we've got the same transaction that we had in the slide. You notice down here, we have the journal entry, okay? So I'm going to wipe out the journal entry and we're going to start from scratch, okay? So first thing you do when you read a transaction, and this is a huge thing we're going to practice today, and just as a class, and then we'll do it as an activity on Tuesday, is you read the transaction, much like you did in the accounting equation that you did in chapter 1, you identify what's involved. And as I said before, the first thing is start with, is cash involved? Is cash involved in the transaction? It is. So what I would do under account title here is I would just write one of the titles that I'm working with, cash, right? Now, if you're taking notes with this, you can just send your notes. You can kind of create these little headings. And then, because we're going to do more of these, all right? We're going to do more of these. So what's another thing that was affected here? And we just did this, so I'll just kind of write it in, but I'm going to be asking for other ones. Owner's equity, or I should say more specifically, that's not the title, that's the type. So we're going to put owner's capital. So those are the account titles that we're going to use in the journal entry. So then you go with what type are we dealing with? Okay. And of course, we know what that is. It's going to be one of these three, or six rather. All right. And we know that cash is an asset. We know that owner's capital is owner's equity. All right. Now, the normal balance of an asset, we kind of go over here, we know is a debit. So I would say that debits increase, because that's what the normal balance side does. Credits decrease. So I kind of confirm that, or, affirm that in that section. Owner's equity accounts, they have a normal credit balance. So it's the opposite. So for this one, I write credits increase and debits decrease. All right. Now what this next column does is, yes, these are the debit credit rules that you just, brought back to life and you have in your table. What this section does is you're going to look at the transaction and just kind of sit back and look at it and say, all right, for the things involved, do I observe that cash is going up or down? Obviously, it's being invested in the business, so we would call that an increase. Yeah, I don't know where the italicized text came from. There we go. So we would just write in here, if I could spell it today, increase. All right. And the owner's capital, is that going up? Well, yeah, if the owner is investing more of his personal money, that is an increase as well. So I'm going to put that in there too. Okay. All right. And this is the most important part of the table right here to the right. So we've identified the account titles, their types, which we've already practiced. The normal balance is a result of their types over here. we've observed that they both indeed went up. And then this is the part that tells you what to do in the journal entry. And this is how it works. You look at what you observed and then compare that to the debit credit theory. So basically, if it's an increase, you find the increasing thing over here, which is a debit. So that is what we would put. Now, if this said decrease, then we would use the decreasing thing in the debit credit theory. And then I would say credit here, all right? So for owner's capital, we got an increase. And then we just look over here, all right? Obviously, we're going to pick this, the credits, because that is what the increasing thing is for that account. So what these last three columns do is have you recall the accounting theory, observe that if it went up and down by your own, judgment, and then basically taking what you observed and use the debit credit theory or accounting theory to show that. So by debiting the cash account, which again, we just saw this a minute ago for the 15 grand, we are now saying that cash went up, all right? So this ties in what you observe with the theory, and this is what you do to show in the journal entry that cash went up. And similarly, owner's capital went up as well, all right? And that helps you construct the journal entry, all right? So now here's the cool part. We're going to be working extensively with this table, because some of you have a really strong grasp and like, oh, that's that type, yeah, and a normal debit balance, blah, blah, blah. And in Zoom and in class, some of you are rattling it right off. You got it. Some of you are kind of, a couple of them I got, and some of them I'm fuzzy on. And they're not, hopefully, the last part, there might be a bunch of you that still are, struggling and figuring out all this from scratch. Hopefully that number of students is very low, all right? But what I will say is this. Filling out this table, recalling the information, even if you have to look it up, and repeatedly doing that is going to give you those skills that at one point where you go to fill this table out, you're going to realize you don't need to do it anymore. And all that stuff that you manually typed into this table or wrote into the table, you're simply going to know. And that is what I'm shooting for, all right? Two important things. One, you can think of filling out this table similar to like the training wheels on a bike. Everybody rode a bike when you were a kid, and nobody started out without training wheels, right? Right? I had training wheels, Oh, well, some safety measure, right? So the training wheels were really cool because they had a good extra support in the back, and you could really lean your bike and not crash it. And when the wheels were off, you couldn't do that. I learned the hard way on that. But what are the training wheels there for? So you can get used to the bike, and then once you get used to your balance point, the training wheels come off, and then suddenly you're riding a bike, right? You can think of this table as your training wheels. All right. I'm the king of analogies, and there's today's analogy. All right. Yeah, you can think of this table as a means to an end, to get the knowledge organized in place so you can make a good decision on what needs to be debited and credited. All right. Here's another cool thing about the table. Probably about 80%, 75 to 80% of your first exam is based on the skills you demonstrate to fill out this table. All right. So my first exam is very heavily focusing on being able to analyze a transaction and put it in the journal, because that skill is a fundamental skill that you need to have in place for the rest of the course. And 102, if you have to take 102, your knowledge and being able to apply this and prepare journal entries is huge. All right. You're already a leg up in the next version of this course for accounting 102 if you could do this really well. All right. So we're going to practice it a lot. So I'm going to erase this, and I'm going to go ahead and go into the PowerPoints here. And I'm going to go out of the presentation, and I'm going to do more of that. So let me get out of here, and I'm going to go into that first transaction, which I don't know how I lost it. There we go. And I'm just going to go ahead and copy this next piece in. So, all right, let me see. I have no copy options, so I'll go up here. And I'm going to go down and just paste that into gotta size that back up. There we go. To a respectful size. That's too big. Oops, I don't want that either. There we go. All right. And I'm gonna go ahead and just put that right here. So now we got the second transaction. Again, this is all from chapter 1, all right? Soft bite purchases. All right, I'll kind of reset this so there's nothing in there. Soft bite purchased computer equipment for $7,000 cash, right? Always start with cash. Is it involved here in this transaction? Sure. So you literally just type that in first. All right, there's your first account title. So what else is involved here? Is the business acquiring or getting anything? What are they getting? Equipment. So I would say that would be a good candidate for the other account title. What account type is cash? It's an asset. What type is equipment? Also an asset. They're both resources the business can use. And you know what? I got to pull that chat back up. So I got some people in Zoom that are participating, which is very awesome. Let me see. Looks like it's just Marlana so far. So I called Marlana people. I have person participating in Zoom. Okay. Hopefully
It's
maybe
Marlena.
kick in there. What's that?
It's Marlena, not Marlana.
Oh, I'm sorry, Marlena. All right. I will make the adjustment. Sorry about that. All right. So next thing would be normal balance. All right. And again, I got the same thing that we saw over here, although that's pretty small now. Let's make that big again. There we go. Yeah, so all assets have a normal debit balance. So that means that debits increase, and then that would mean that credits would have to decrease. Now, since this is the same for both, I'm just going to drag through. All right. Now, when we look at the transaction, is cash going up or is it going down? It's decreasing or going down. So we'll just say decrease there. And is my equipment account going up or going down? Up. Like if you didn't have equipment before, you are getting it now. Okay, so that's an increase. So again, we did this in chapter 1. You made those observations in chapter 1. All we're doing here is we're organizing those thoughts. So now with this last column, you just compare what you noted here with the theory over here. So if we've got a decrease, what do we got to pick over here to show it? You got to pick the decreasing thing for that account, which would be a credit. We got an increase here. So what do we pick over here to show it? We pick a debit. All right. So this is the unifying piece. All right. Because if you're razor sharp with this stuff, great. You're going to fill that table out very fast. If you're so-so with it, you're going to be able to pinpoint the thing you're having trouble with. You're like, you know what? I know the account name, the type. I get stuck in the normal balances. So now this table draws attention to things that you need to sharpen up or might be weak areas. Okay. It might even be this over here, you know, but it helps organize things, all the things you need to be thinking about in order to properly journalize the entry. Okay. All right. Now we know what to do. Debit or credit. Debits go first, as you know. So the debited account goes first. That's equipment. Notice that's it. It's tight to that little tiny margin. You can barely see it. All right. And then we are crediting the cash account. And of course, that's going to be the $7,000. All right. Now remember, when you credit cash, you're decreasing it. That's how you show it in the journal entry. Right. Contrast that to the previous one we did where we debited cash, which is what we did to increase it. And there you go. Let's do a couple more here. So the next slide. Well, before I do that, let me go back to my accounting equation. All right. And resize that again. Going out of the PowerPoint full view kind of messed up all my focuses here. All right. So with that one, you remember, we used $7,000 in cash to buy the equipment, and then 7,000 went up in equipment because it increased. We got more of it now. So this is what it looks like from chapter 1. We did this. You did this. We did it as a class with the presentation in chapter 1. But this is what it would look like on the equation. So this is again tying in what you did with the equation to how it is done in chapter 2 in the actual recording process. All right. So let's do some more with this. All right. And the next slide here, there's some more transactions. All right, now suddenly we're with Butler Company. That's okay. All right, that's fine. They just did the first Ray Neal one, I guess. So let me go in and I'm just gonna go ahead and throw that transaction in here. Oh, well, let me put it there. I'll put it there. There we go. All right. So, and I'm going to delete the table and our journal entry, and we'll do this again. All right, we'll do this one and we'll take a break, then we'll come back and we'll do more of them. All right, on July 1st, Butler Company purchases a delivery truck costing 14,000 bucks. All right. So what's involved here? What's one thing obviously involved?
Yeah.
Always start with cash, right? All right, you don't see on account, you don't see on credit, or we'll pay you next month. All that implies a liability where we owe for the truck. No, we spent money. So a delivery truck, I mean, we could call the account title delivery truck, that would be okay, but Wiley usually generalizes it and they call it equipment. Fine. So what type of an account is cash again? It's an asset. All right, and what type is equipment again? You see a little deja vu here? We just did this, didn't we? All right, what's the normal balance of any asset? Normal debit balance, so that means debits increase, and then credits would then do what? They got to be the decreasing side. And now that I know that, they're both the same, I'll just copy that down. Now, is my cash going up or down? When we look at the transaction, it is decreasing. All right. Is my equipment going up or down? Yeah. If you didn't have a delivery truck before, do you have one now? Yeah, it's an increase. All right. Okay. All right. So then this last table or last part of the table, you just compare what you observe with the theory. What do I got to do to this account to show the decrease? I'm going to credit the account. Excellent participation in Zoom. I'm loving it. Oh, did I just use a McDonald's thing? I'm loving it. Oh, God, no. Must be those 2 apple pies I ate yesterday from there. That's one of my weaknesses. All right, so we got an increase here. What do we pick over here to show that? We are going to debit. All right. Now, no matter what order the table's in, who cares? You know that whatever's debited's got to go first. So we're going to put the equipment in first. And then we're going to credit the cash account. All right. And then we put our numbers in there. So this will be 14,000 and 14,000. Yep. And that's the name of the game. All right. So when we get back from break, I'd like to pull up something in Wiley Plus or the ebook with, a set of transactions, and let's work through them with this table. All right. And keep doing this. All right. So let's go ahead. I'm going to pause the recording. Let's take a 10-minute break. Let's come back and do a little more with this.